And welcome to Business Incorporated live on Channels Television. It's the midweek trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. The Central Bank of Nigeria kicks off a Dutch auction system today to tackle forex shortages. Plus, we speak to the Director General of the Securities and Exchange Commission on plans for Nigeria's capital market. And also, we see the Central Bank of Kenya announces 4 new changes to Kenyan banknotes. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on the markets now. Let's see what's happening with oil. Yesterday, we know Monday was quite dramatic, for major markets that we track, and we saw the sell-offs on Monday. Some have tagged it Black Monday for most markets, but we've seen a recovery, and today the recovery also follows. You see Brent 0.16%, $76.60 a barrel, while the U.S. grade WTI, that's $73.37 a barrel, up about 0.23%. We're still putting eyes on tension in the Middle East and demand issues. We're seeing forecasts that we might get a recession in the world's largest economy. So we're seeing the largest consumers of oil having impacts on what's happening with those economies, and that's what's impacting the oil market so far. Let's get a check on metals market now. Definitely, we've also seen gold. Gold seems to be shining more when you're looking at the metals market. 0.2% up. Silver again down today, just like yesterday. So they have it. Palladium, that's up by 1.06%, but we're seeing a pullback there for gold, down about 0.3%. But we had good outing on Monday and Tuesday. We know when there's a meltdown, investors run to the safe haven assets, but mostly we've seen gold leading with that, but today it's palladium leading the charge, and the most metal markets we track right here. All right, to the FX market now. We see the Central Bank of Nigeria is kicking off the retail Dutch auction system. That's today, targeted at increasing the demand pressure, reducing the demand pressure in the FX market and stabilizing the exchange rate of the naira. We know in a circular to the banks, the CBN noted that it has noticed huge increase in unmet FX demands from end users with the banks, which has exacerbated the pressure on the FX market and adversely impacted the naira's exchange rate. But we've seen stability from around the 1,500 to 1,600 level. And while the Central Bank of Nigeria remains determined to reduce inflation using monetary policy, the cost to the economy will continue to increase the cost of living. And partner and the head of transfer pricing services practice at Anderson, Nigeria, Dr. John Bamfo, was a guest on Business Morning, believes that a target should be set and communicated with investors. Take a listen.
Today, yes, there's some intervention. Yes, the Central Bank of Nigeria sells dollars to the banks as well as some BDCs. However, there's no communication in terms of where they expect the price to be. And that is the biggest difference. We all know how the central banks across the world impacts, the expectations of investors. We saw that even in the US when the Fed delayed in cutting down interest rates, and we saw how on Monday, stock prices behaved. All right. So all these investors make decisions based on their expectations. They speculate. Now, the Central Bank of Nigeria can manage those expectations or those speculations and can be able to deal with some of the speculative activities in the market. Until they do that, what is going to happen is, yes, you are intervening, yes, you are supplying as much as possible, but you are still subject to the demand and supply forces, and there's a big chunk of demand which is being driven by speculators that you cannot actually manage. And that is what is leading to the naira further depreciating. And as long as the naira continues to depreciate, it's going to be very difficult for us to bring price stability, achieve price stability by the CBN. In other words, bring inflation rate down. Yes, Central Bank of Nigeria is doing a good job in terms of increasing monetary policy rate, but it comes at a huge cost to the economy itself. When the cost of borrowing keeps going up, investors cannot borrow as much, in order to expand their businesses or even start new businesses.
Yeah, that was Mr. Banfo earlier on Business Morning. And yes, it's still about conversations about central banks and raising rates, even though we're seeing some climbs. The inflation targets getting closer for most of developed economies, but here we're still trying to get there. Anyway, to our first conversation now, we know as listed companies reel out their results and Nigerian banks make moves to raise capital in the markets, investors need to be protected, looked at in navigating investments in Nigeria this time. But let's hear now from the latest Securities and Exchange Commission Director General, that's Dr. Imamotimi Agama, joining us from our Abuja studio. Great to have you on the show, sir.
Thank you very much for having me.
All right, it's great to have you, and definitely, I believe, first of all, congratulations are in order on your new role. Talk to me, how does it feel?
Well, it feels good. It feels good to have an opportunity to serve the nation from the regulatory perspective as the apex regulatory
All right, I don't think I can hear.
I said it feels good to be here. It feels good to serve Nigeria from the perspective of a regulator. And I believe strongly that we have a lot to contribute to the development of this market.
All right, so, how would you gauge, compliance to regulation, by listed companies so far? It's been an incredible first half for 2024, and now we're in the second half. How are you seeing, Nigeria's capital market, post assuming office?
So far, it's been a mixed bag, and clearly there have been some very significant strides by companies in an attempt to comply with our regulations and the regulations of the capital market. Of course, they are aware that the new management, has been appointed by the president, President Bola Ahmed Tinubu, His Excellency. And so clearly, the direction is changing, and the mood is shifting, believing strongly that we are here poised for business, and business means good compliance. And of course, for those that are yet to comply, we are encouraging them to comply by all means. So basically, for this administration, it's about encouraging people to comply, because that is what we desire for companies to do rather than punishments.
And what are you seeing, going forward now? Definitely, we know we've been talking a lot, about issues in the capital market from we've seen issues when it comes to dividends, unclaimed dividends. I know that has been a major issue, in the market. Talk to me about how you're seeing it and if we're seeing any kind of improvement when it comes to unclaimed dividends.
Yes, thank you for that very vexed question. I call it vexed question because everybody's interested. And clearly, for the SEC, it's a very important topic. And because it actually speaks to the investors themselves. So unclaimed dividend means dividends that have not been claimed by investors. The reason why investors come to the market is actually to have a return. And when they do have a return, and that return is not getting to them, then it becomes a challenge. And the SEC is very, very serious about it. So very recently, the Senate Committee on Capital Market had a program, a hearing on it, and we were there fully represented. But for us at the SEC, we believe that we can deal with it. And that actually has taken us into rejigging the entire process. Very recently, the SEC and the capital market operators in a committee set up by the commission, actually looked at the entire spectrum of the unclaimed dividend issue. And basically, we identified that the major issue is about, identification of investors. So that alone brings to bear to the fact that technology will be a solution. So we are looking at the full hog of the entire process, trying to make sure that we identify people, because one of the major reasons why dividends are not paid to people is because of their account numbers and all of those details that are required for us to be able, for the companies to be able to do that. So the SEC is actually in the forefront of making sure that the unclaimed dividends are reduced, and of course, at the end of the day, they are completely, erased. So for the SEC, we will continue to do our best. We will employ technology, we will employ education, we will employ persuasion, we will employ every means that is legitimate to cause people to understand exactly the processes around claiming of dividends, the processes about identification, and the processes around making sure that people understand exactly what they need to do in an attempt to get their dividends back. And for us, any attempt to get this, to reduce the dividend, will be a positive angle of our administration.
Look at another segment that's becoming quite popular, and that's green finance. Recently the SEC and partnered with the Africa Development Bank, to boost Nigeria's green finance leadership. So tell us, what transpired and what we can expect, really, when it comes to green finance, and if it puts more pressure, on the SEC when it comes to regulation.
Well, it won't put more pressure on the SEC. The regulation, as far as the SEC concerned, is talent-based and indeed knowledge-based. So green finance, like it is one of the newest instruments in the capital market. And so what does it speak to? It speaks to actually the Nigerian nature, because for Nigeria as a whole, go north, go west, go south, go east, we are speaking about the green economy. So for us, it's an opportunity to provide investors another avenue of investing in an instrument or in a space that clearly speaks to their nature. So for us at the SEC also, what it requires is for us to improve our knowledge, to improve our talents, and that is why we are collaborating with the AFDB to be able to provide capacity development, both for the regulators and for market operators, because without enough capacity, we will not be able to deal with the challenges that comes around that. And also, very importantly, Nigeria is a green economy, and indeed fostering a green economy and getting the green economy to part of the development of the president will be an essential aspect of creating a better space for people who want to invest in the capital market. So for us, there's no pressure. We are up to the task. We are dealing with the challenges that it will bring. And of course, we are improving the knowledge of participants and both the regulators to be able to meet with these challenges at any point in time.
Talking about investments, we definitely cannot look away from the bank recapitalization process. We're seeing a lot of banks, a couple of banks have tapped the market right now. But I want to know if you're satisfied with how the banks are engaging, with investors. Sometimes when I go into my bank apps, I can see that, some of their offers are right there, on my app. So how are you seeing all of that?
Well, just to let you know, on the inauguration of the current board by the Honorable Minister for Finance, Mr. Wale Edun, one of the charge to the SEC was innovation. And for us at the SEC, that is what we are embracing. Section 55 of the Investment and Securities Act actually gives us powers to be able to create apps or electronic means of offering in the Nigerian capital market. So in putting that to play, what we have encouraged is electronic offering in order to also deal with the issues of unclaimed dividend and all other issues that has to do with identification. So you can see what has happened. We are on speed in terms of our approvals on the bank issues. My team is working day and night to making sure that all of the applicants to the Nigerian capital market are attended to in quick time. And so for us, we are satisfied, and we believe that our clients, who are the banks and the companies that come to the market, are also satisfied. Time to market is of essence for us, and so we are making sure that every offer that comes to us in good form is properly attended to, and approvals are given speedily. And so for us, we are excited about the development. We know that this will bring to the market and indeed the banking system. Besides, we believe a strong banking system will help in achieving the president's agenda for a $1 trillion market.
Another burning issue right now, that's the cryptocurrency industry. We know a lot of countries, a lot of Securities and Exchange Commissions are struggling when it comes to, regulating cryptocurrency. So talk to me about how hard it is actually regulating cryptocurrency in a country like Nigeria.
Well, it's exciting. That's what I would say. The SEC had been in the forefront of regulation within the fintech space, and this started far back in 2017, and so we are continuing in that state. In 2020, September precisely, the SEC issued a statement, providing clarification on around fintech and everything around fintech. Inclusive of that is digital assets, and cryptocurrency is one of those digital assets. So for us at the SEC, we have been working from long ago, before now, to making sure that the space is safe, because primarily the objective of the SEC is investor protection and market development. So if we provide education, if we provide knowledge, if we provide regulatory framework for the market, then the market will be safe. And that is exactly what we've been doing. We have issued the VAS regulation, which is the Virtual Asset Service Providers regulation, long time ago. And of course, besides that, what we also did was we introduced the regulatory incubation and the accelerated regulatory incubation programs from the SEC's perspective, making sure that everyone that is involved in this space has, regulation around them and is able to understand the friendliness of the SEC in terms of bringing everybody on board and making sure that the space is safe, the investor is protected, and market is developed. So for us at the SEC, we are up and doing around it, and we believe strongly that continuous learning in compliance with international best practice will be the best way to go. And we're not going to shy away from it, because it's either we bring them in or we lose it all. So for us at the SEC, it's a matter of bringing them all in, and that's exactly what we are doing.
Crypto has had regulatory issues in a couple of countries, even recently. Do you see Nigeria, being crypto friendly at some point?
Well, from what I've said earlier, you understand that Nigeria is not averse to good cryptocurrency regulation. So for us, it's about positive cryptocurrency regulation. Every crypto exchange, everyone that trades cryptocurrency in this country must come under regulation, must be seen, must be known. That is, the way the SEC sees it. And so, because cryptocurrency regulation has relationship with macroeconomic variables, and as such, we would not want anybody to be out of our space in our ability to build a strong and virile market for the Nigerian economy. So clearly for us, it is all about having to make them understand, get people more educated about, cryptocurrency trading, digital asset trading, and everything that has to do with it. There are opportunities around it. And so let's look at the opportunities. And as such, we'll deal with everyone who is not complying with our regulations as, provided by the law. We are certainly going to work by the law and nothing but the law. So we believe that everyone is, actually understanding where we are coming from. And of course, they are following our regulations as much as they can. So we believe that in the coming months or days, certainly more information will be made available to Nigerians as we move on. But what is critical for us is the protection of Nigerians.
Right, and I know very soon the capital market stakeholders are going to be meeting for another, I think it's called the CMC meeting, definitely. What should we look out for, this coming one?
Yes, of course, we'll be unveiling our vision, where we are going to, we know exactly where we came from, and we know where we are going to. We should know where we are going to also. So we'll be unveiling where we are going to. We'll also be soliciting the cooperation of all capital market operators in making sure that we build a market that we'll all be happy about, a market that is transparent, a market that has integrity, a market that has value, and of course, a market that detests manipulation. So for us at the SEC, for our team, our business and our intention, like I said earlier, is investor protection and creating an opportunity for everyone that is going to be playing in this field to actually appreciate the good work of Mr. President in the redistribution of wealth to all Nigerians. The essence of the capital market is to create a strong economy, because the capital market is indeed the barometer of the economy. We'll, as much as possible, make the capital market strong enough that everybody will be proud of. Every Nigerian citizen will be interested in investing in the capital market, and that is our goal. That is the goal of Mr. President, and of course, we'll do all that we can to be able to achieve that goal.
All right, thank you so much. It was great having you, Dr. Emomotimi Agama, Director General, Securities and Exchange Commission, and congratulations again on your new role.
Thank you very much, Ladi, for having me.
Thank you. All right, let's go to another conversation now that's also related. We see in the dynamic landscape of the Nigerian financial sector, Access Holdings is embarking on a strategic initiative poised to reshape its future and enhance its competitive edge. The company's decision to pursue a rights issue represents not just a financial maneuver, but a bold step towards unlocking new opportunities for growth and development. Let's discuss this more now with Mr. Rotimi Fakejo, the Managing Director, Greenhouse Business Diagnostics and Analytics Limited, joining me right here in the studio. Great to have you.
A pleasure.
So I know it's rights issue season, at this point. So all we're talking about right now, we know the banks are tapping the markets at this time, but talk to me about Access Bank's rights issue. We've had some people people talk about how it's quite different, from the usual, at this time. So tell me about your take on this rights issue from Access Holdings.
Well, as a stockbroker, whenever any offer is being taken it's ongoing in the market, they tell investors, ask your stockbrokers, ask your solicitors, ask your investment bankers. And basically, is to seek information as to know whether they should deploy more money if it is a rights issue, or they should engage in it at all if it's a public offer. However, we have Access Bank here, and I think the three cardinals of investment, of you being able to take a position, is you looking at this company, is it growing? This company, is it profitable? This company, is it sustainable? Now we've seen Access Bank maybe when the new management took over about 20 years ago, we saw how small it was. And the Bible says we should not despise a little beginning. Investors that took advantage of Access Bank then are having a fantastic years thereafter. Because Access Bank that was at the brink of death was revived, strengthened, empowered, and we are where we are today. And over the years, when you look at the metrics for the different banks, about 4 years back, when you look at profitability for Access Bank, it wasn't as much as those of other banks. The reason had been that they focused on growth. In growing, they focused more on consolidation. And having attained consolidation, we are seeing a situation whereby they have now matched up with the top leading 5 banks in the Nigerian banking space. So now when you talk of growth, Access Bank can be compared to any other bank. When you talk of profitability, they match up with every other bank. And looking at it in terms of sustainability, the diversification of Access Bank assets, both having dominance in the Nigerian space and also in Africa, in Asia, and in Europe. They are present in about 22 countries. And I make bold to say that what we have seen may just be the beginning of not just saying Access Bank is one of the top 5, but to a great extent, maybe the #1 bank. And how do I say this? When you look at the metrics, the gross earnings of Access Bank is the topmost. It's about 2.54 trillion in the last audited financial year. When you look at the balance sheet, the asset base is about 26 trillion. As at the last audited, the liability is about 20, which makes it about 46 trillion. Other banks that got close to that, they're just in the neighborhood about maybe 32 or 36. So when you talk of balance sheet size, Access Bank is tops. When you talk of gross earnings, Access Bank is tops. And the figures are there for anyone to see.
All right, I'm talking about the figures. You know, at this point, we're seeing they're trying to raise about 351 billion naira from this rights issue. So definitely, we know these banks want to raise money. But what do you think Access is going to be using this money for?
Well, I think if you look at the first, it came as a regulatory compliance. But I think at the end of it all, immediately that statement was issued, the banks embraced it, but we have seen a lot of preparedness in Access Bank and the boldness that they have. Other banks are doing hybrid offer, that is a mix of rights issue and public offer. But we are seeing Access Bank doing rights issue, which means that they believe in themselves. With the figures that we have seen over the years, the trend has been established. And at the same time, they believe that their shareholders believe in them strong enough to be able to take positions. And when you look at the ongoing rights, I'm coming back to what you asked. When you look at the ongoing rights, the trading in rights of Access is very, very active. So even those people who may not be around to take up their rights, new investors are coming in to buy those rights. And believe me, with what we are seeing, this, even as at this time, is already near success. Now, when you look at what they want to use the money to do, they want to expand business locally and internationally. They want to improve their infrastructure assets. And at the same time, they want to look at how they can upgrade what is already on ground in terms of expanding their horizon. So I think with the diversification of that particular, aside from Access Bank and the Access Holding Group, Access, we also have oxygen, we have hydrogen, we have Access PFA. And with all of that diversified and present in a lot of other countries, I believe that this is already a success. Because we do interact among ourselves as stockbrokers, and for what we've seen, I think with the consolidation we have seen in their performance over the years, I believe strongly that whoever is making a choice of taking up their rights at this time, they're making the best lifetime decision. And how that is, we talk about short-term benefits of this. And
yeah, I was going to come to that, because definitely investors want to know what is in it for them.
Exactly. You know, when you look at the short term, the 52-week high of Access Bank shares was over 13 naira before the virus pullback, right? You understand, which also happened to other banks. Now, when you look at 30 naira above, that means buying these shares, taking up your rights right now, you are taking it up at a discount of what the intrinsic value of Access Bank should be.
So you're saying that stock is undervalued right now?
Exactly. Because when you look at the trajectory that we're going to see in the next 6 months, I will be justified with what I'm saying today. And when you look at the contemporaries, I've just said that Access Bank has the highest gross earnings, has the largest balance sheet. When you look at the top 5 banks, the pricing of Access is still a little short. There's still a deficit compared to those other ones. So I see a situation whereby we see, just as they even up in profitability, they will also even up in terms of the way investors price them. So in the short term, we're going to see price capital appreciation for Access holding shareholders, Access holding corporation shareholders. Then also in the long term, we're going to see an increasingly consistent dividend payout. Because all I've seen is they are not in a hurry because they believe consolidation is the first thing to do. So having consolidated now, we're going to see more dividend payout to the investors and better growth in all spheres.
All right, so, definitely talking about dividends, how constant, or have they been, when it comes to dividend payment? Because we know investors love to know. They want to know how's this company, doing when it comes to, payments of dividends. And obviously, we also have some investors. These are quite interesting times, and we know it comes a squeeze, but we have some investors that be trying to decide, should I take my rights at this time? What's your advice to that kind of investor?
Well, without missing words, if an investor chooses not to take his or her rights in Access Holdco, I believe it will be the biggest mistake of a lifetime. Because after this, we're going to see stronger banks in the Nigerian banking space. We're going to see a stronger economy with the various policies that this present government is churning out. By the time the results begin to come out, we're going to see an influx of foreign portfolio investors. And as at that time, which shares, which company shares, which equities will they be asking for? They're going to look at the performance metrics of different sectors, especially in the banking. And without mincing words, they're going to have to choose access with other banks. And when foreign portfolio investors' money join what we have presently in Nigeria, the 30.7 naira that we've seen as a 52-week high of Access Bank, of Access Holdco, will just be like a child play. Just we have seen other banks get to 50, we're going to see a new trend happening for Access Holdco by the time this consolidation is, this offer is over, and by the time we see their next audited financial report. So investors are going to do themselves a lot of favor. If they already own Access shares, they should ensure that they take up their rights. And if they do not own Access Bank share, Access Holdco shares, they should also go to the secondary market. Their rights are being traded, and for investors to take advantage. But whoever is taking up rights right now is taking it up at a discount.
At a discount, considering, where it's coming from. Okay, but how does this offer impact Access Holdings, market performance, when I'm looking at where they are now, where they've been, and where they're going to?
And like I said, when you look at the operational expenses of Access Holdco right now, relative to others, is somewhat high. But that is happening because they are focusing on expansion. So whenever you take up a new asset, like they are doing in several African countries, you are definitely going to have to spend money to be able to put those assets in proper shape. So that is where we are seeing that the profitability is just about getting even with other banks. But with the consolidation concluding, and after this offer, we're going to see more profitability for Access Holdco. And when that happens, we know that the EPS will increase. The EPS, as at the last auditor, was about 17 naira. And if the EPS increases, and banks are allowed to pay about 30% of their EPS, then definitely we're going to see a situation whereby the dividend being earned right now is going to be maybe about 50% of what they will earn in about 2 years' time. So investors are taking an all-round decision by endorsing themselves to take up their rights at this time. And if you do not have a present shareholder of Access Holdco, you still have an opportunity by going to the secondary market, tell your stockbrokers, I want to take up, I want to partake in this, but I'm not a shareholder. Trade in the rights for me and buy for me, and definitely you'll be a partaker of what is to come.
All right, let's just imagine now, let's maybe fast forward, the banks have met, their capital raises, and that whole season, comes to an end. Where do you see, Access Bank share price, at that kind of time?
Well, I've just said it. Investors we had a recession in the pricing of bank shares because of the present offer. So investors will rather take up their rights because they have opportunities 1 for 2, 1 issues for 2 already held. They can't get that quantum in the capital market, in the secondary market. So they are rather taking up their rights. And if they are taking up their rights, definitely we can expect the price in the secondary market to continue to go up while the offer is on. So when the offer is over, and everybody, new investors will now look at, okay, I took up my rights, I even want to take more. By the time they see the half-year report of Access Holdco and the Q3, we're going to see the trajectory coming back for that, for the equity.
So that means you see that share price actually going up.
Definitely. And remember I said the 52-week high was 30.7. And now we are at about 19. What that implies is that taking up your rights right now, we are already booking a 50% capital appreciation in about 6 months' time. There is no other investment that can guarantee you that.
Guarantee. Key word, definitely. Thank you so much. It was great having you for this conversation, Mr. Rotimi Fakayejo, MD, Greenhouse Business and Diagnostics and Analytics Limited. Thank you so much for coming on.
My pleasure.
Yeah, so it's all about rights issues right now, and some public offers as these banks are moving on to raise capital for the Central Bank of Nigeria recapitalization exercise. But we're going to drill down more on what's happening with the markets and most of the global markets that we track. That's in a moment. Just stay with us. Welcome back. Well, let's head straight to the markets. We have Anita Edet with the details of what's happened with the local bourse and most of the global markets we track. Anita, as I did say before, it's capital raising season for the banks here in Nigeria, and we have our first merger, this time with Unity Bank and Providus. We got that regulatory approval from the CBN. Quite interesting, and I'm sure we're going to see more interesting stuff come up, with this process.
Yeah, Ladi, it's quite interesting, especially, but some of us weren't surprised because when you take a look at Unity Bank, which is a listed entity on the Nigerian exchange, we saw that, yes, it's quite a small bank. You don't know whether to quantify it as a tier 2 or a tier 3 bank. But I think it will be a welcome relief, especially when you look at the Nigerian banking landscape. And I wouldn't be surprised if there's more of this mergers, if not acquisition, is to come in.
All eyes on the banks at this point.
All eyes on Nigeria's banking industry. So, but let's talk about the market intraday trading across the African continent. And we're starting first, of course, starting from the home front, where we see Nigeria's exchange. The ASI making some form of a comeback at intraday. The market was in the green. Major indexes across the continent were also in the green, both for the JSE, the Egyptian Stock Exchange, as well as the Kenyan Stock Exchange, where we saw all of them making some form of bargain hunting there. We saw all of those markets making some kind of comeback, if we could get that on the screen. Now, so this is it for Nigerian market at intraday, 0.17%. Of course, yesterday we saw a 0.67% pullback on the market. Year to date has now been reduced to about 29.6%. Month to date, the market is down by 0.9%. So like I mentioned, it was 0.67%. But still, it's just barely standing within the 97,000 points of the market, 97,089.52. For Nigeria's market. And for the South African stock market here, intraday, the number has been oscillating between 81,000 and 80,000. So it's barely surviving at 80,000, 131.00, 0.1 is 0.88% for the JSE bourse. On the other side of the market, where we see Egypt and Kenya. Kenya, speaking of Kenya, it had its first interest rate cut for the very first time, which surprised the market. We saw about a 25 basis points decrease in the benchmark rate to about 12.75%. That's the first time since 2020 where we saw that the Central Bank of Kenya, that the CBK, reducing the benchmark interest rate from 7.25% to 7%, which was about 25 basis points. But the market, of course, reacted positively to that. Almost 1% gain for the close of Tuesday's session, and it was just about 102.15 for the Kenyan All-Share Index, what you call the Kenya, that's the benchmark index of Kenya's stock market. And from the Africa, we go straight over to the Middle East, where we also see most of the markets are trying to shake off the blues that they started with across the world, which was after the U.S. The cold from the sneezing from the U.S. court led to the markets, the cold that affected all the markets. So now they're shaking off the blues, and we see 1.24%. Added to the Abu Dhabi index of the United Arab Emirates, 9,196. For the Dubai FM, 1.47%. On the other sides of the market, we see Saudi Arabia 0.46% at intraday, while the Qatari Stock Exchange, although it has made some rebound from this number, and that number could keep oscillating. Now, from there, we move over to the United States, where we also see stock futures rising, and this is coming after the markets are snapping a 3-day. They snapped that 3 day of losses, where you can see the Dow Jones Industrial Average 0.79%. S&P 500 1.06%, and the Nasdaq futures 1.26%. Now, overnight in the U.S., it was we saw that all the averages they gained, while all the three major averages they gained. So, but to give us a more summary about Tuesday's closing for Wall Street, let's bring in our Washington correspondent Maria Bird.
The U.S. stock market took an upward swing on Tuesday as it snapped a 3-day losing streak for the Dow Jones. The Dow Jones was up at 0.76%, and the S&P 500 was up at 1.04%, while the heavy tech Nasdaq also had a positive day at 1.03% up. This alleviated much fears of a potential recession, as it appears that the U.S. stock market is on a rebound. It was quite a day in the U.S. as the announcement of the VP pick for the Democratic Party. This may have had some bit of an impact on the U.S. economy and the stock market. It is clear that investors are still watching to see the days and weeks ahead as the political landscape in the U.S. continues to unfold and has an impact in some way on the U.S. stock market.
Our Washington correspondent Maria Bird with a summary of Tuesday's closing session from the world's biggest stock market, that's the United States. So, Ladi, I can't give you much details about the Asian market, but I know that the indexes, they closed today in positive terrain. That's following that rebound from the US.
All eyes on this comeback. Is it going to stay? We'll keep watching, definitely. Thank you so much.
All eyes are really on it.
Yeah, all eyes on it. Thank you so much, Anita, for the details there. Most of the markets we track locally and globally. But let's take it on to Europe now. We see German factory orders rebounded, that's in June, due to significant improvement in the auto industry. Let's hear more now from Chiponda Chimbelu right there in Berlin. Get to have your chip. So what are the latest figures?
Thanks for having me. In June, Ladi, orders in Germany's manufacturing sector rose 3.9% from May. Now, that is, of course, according to the latest figures from the Federal Statistics Agency, Status. Factory orders rose for the first time in 6 months. Now, that has, of course, boosted some hopes that Europe's biggest economy could be gaining momentum. Now, the German economy shrank last year partly due to a slowdown in its industry. The rise in June was largely attributed to stellar figures from the auto sector, where orders rose more than 9% on the month. Overall, the rise in factory orders in June was actually driven more by domestic activity rather than foreign orders.
All right, so turning to the markets now, what can we expect today?
European stocks are expected to make gains today. That, of course, comes off the back of a positive session in Asia where shares rallied after the Bank of Japan said it won't raise interest rates if markets are unstable. That, of course, helped reassure investors. Also on Tuesday, statements made by the U.S. Central Bank policymakers and fresh economic data have dampened concerns about a potential recession in the world's biggest economy. And here in Germany, the June factory orders have been validated by the latest production data from the same month. Figures released today show that production rose 1.4% on the month, and that rise was mainly due to the auto industry. Electrical industry production also rose, but the food industry recorded a contraction, which negatively impacted the overall figure for Germany's industrial production. Now, today, investors here in Europe will also be on the lookout for Spain's July CPI and U.S. June consumer credit later. Company earnings due today include German consumer goods maker Beiersdorf and Swiss mining giant Glencore.
All right, so much to look out for. Thank you so much, Chiponda Chimbelu, giving us the details from Europe. All right, let's take it on to Kenya now. We see the Central Bank of Kenya has announced 4 new changes to Kenyan banknotes. Central Bank of Kenya noted that changes were made to various currencies, rather looking at the 50 Kenyan shilling, the 100 Kenyan shilling, 200, 500, and 1,000 Kenyan shilling notes. The regulator clarified that all banknotes currently in circulation remain legal tender and will circulate alongside the released banknotes. All right, let's get a check on Zimbabwe now. The cabinet said it's approved the roadmap to abandon U.S. dollars in favor of its bullion-backed currency in transactions, a strategy that the finance minister will unveil next week. Southern African nation is trying to shake off its dependence on the dollar to a centerpiece of most economic activity, and that's been the case for the past 15 years. So we're seeing a change from that. And the African Development Bank says Zimbabwe needs to come up with $3.7 billion annually through the end of the decade if it wants to upgrade its economy and achieve its vision of becoming an upper-middle income country by then. The funding gap equates to about 13.4% of GDP annually, and the magnitude of these estimated financing needs actually cast doubt on the ability of Zimbabwe to mobilize these financial resources. All right, now let's get a check on what's happening in the crypto market. Definitely, it's green on the screen, just like yesterday. Remember, we called it Black Monday. Most markets were affected, and cryptocurrency markets were not left out. So we're seeing that rebound actually continuing, 3.87% for Bitcoin. Let's look at the sentiment in the market. We know this market is either fearful or greedy, and fear has crept in. We used to greed for a couple of months now, but now 29 points and a big drop down. So when it gets to over 50, we know it's neutral. Then much over, maybe about 60, above 60, then we know the market is getting greedy. But right now, the market is fearful. All right, let's bring in Rume Dominic now. He's the Deputy Managing Director, Aviate Industries, joining me via Zoom. Great to have you on the show. All right, so
thank you for having me, Ladi.
Yeah, so
I'm grateful.
Fantastic. So we know this market has been used to greed for a couple of months, seeing that investors were happy, with the gains we saw with Bitcoin, the Bitcoin ETFs, Ethereum ETF, but now the market is fearful. What are you seeing?
Ladi, it's always a pleasure to break down the Bitcoin reports with you every week. But let's be real, Ladi, fear is as natural in the crypto market as jollof rice is at a Nigerian party. This market is a roller coaster and it's not a smooth sail. And the recent Bitcoin dip, truly, especially with the regulation and some of the unfortunate hacks that have come, have definitely spooked some investors. Yesterday, I was looking at the Bitcoin chart for over a 4-year period, and I was looking at it and seeing that there were some certain elements that we did not look at clearly as people that knows how to analyze this chart, and this is the reason why a lot of us have been caught up with this particular bear trap. Truly, we should quickly go back to the chart and see that at a point where we are having this type of sentiment of high level of fear, there is a silent message in the chart that is saying we might still even drop down further to about $38,000.
And definitely, we know the Warren Buffett mantra there, buy when the market is fearful, sell when the market is greedy. But we have some investors that are quite disappointed that have held through, profit, didn't take profit, kept on holding. Then Mr. Market comes along and takes back all of that profit. So what do you do, at this time?
Laddie, you took the words out of my mouth. You started quoting me, my very good friend. Truly, like you said, in the words of Warren Buffett, fear is always a golden opportunity. And remember, volatility is a double-edged sword. Yeah, it can cut deep, but it also creates a massive opportunity for those who are brave and extremely informed. First off, they should not panic, because this is not the first dip and it will not be the last. Another thing is that they should always do their research and they should not just follow the hype. When they understand the technology and the project and the team behind it, which truly are the basic ingredients for choosing a cryptocurrency, they will be able to manage their risks and put in much more than they would have been able to maybe put in before for high level of profits coming back out of the market.
Yeah, definitely. And I keep saying it, not an easy time, to be an investor with most of the economic headwinds we see at this time. But as I say, an investment still has to be made regardless. Thank you so much, Roommate Dominic, Deputy Managing Director, Aviat Industries and founder at Vorum.
All right, I'm grateful, Laddie, because truly I've got my eyes on a few promising players, but that's available for those people that are in my masterclass.
All right, definitely. We're looking out for that. Thank you so much, Roommate. Well, that's the show today. Remember, you can visit channelcb.com for more updates. You can also watch this again on our YouTube channel. Just flip over to YouTube. Check out our productions. You can watch all of that. I'm Laddie Williams from me and the team right here at Channels HQ. It's bye for now.